You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 17th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and be a part of the discussion. On the days you're out of the office, away from your desktop, you can point your browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box. And we also stream live during this broadcast on our YouTube channel, which is youtube.com/CFRN. And we archive each and every daily broadcast there, Currently, there's over 1,600 daily shows archived at youtube.com/CFRN. If you happen to be listening to this as a podcast after the fact, and you'd like to be able to see the charts as well as hear the audio, then hit pause on your podcast player and just point it over to the YouTube channel. It's really that simple. Let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, and for your grace. We thank you that you promise us that where 2 or 3 are gathered in your name, that you are right there in the midst. We welcome you today. We celebrate the gift of life that you have given each of us. We ask that you would open our ears so that we may hear your voice. We pray that you would open our minds so that we may receive your eternal wisdom. Open our spirits so that we may know your leading and guidance. And God, open our hearts so that we may receive your wonderful love and share it with each person we encounter. And we ask this in Jesus' name. Amen. Okay. Amen. Happy Wednesday. Today, being Wednesday, David Grant was out last week. He's going to join us at the top of the hour. He'll be with us for about 30 minutes. We'll talk about the Golden Journey, G999. And then, if Garrett got his headset in the mail from Amazon, he ordered a new headset. He was coming on Monday and then remembered his headset was broken, so he ordered one. And I believe he'll be joining us today about 90 minutes into the broadcast. First, let me give you the numbers from around the world. The cash markets, or the indices as they're called. A reminder, today is a Fed day. The world is waiting to see what Jerome Powell will say. Of course, we'll get his prepared statement first. We'll have the interest rate decision, the prepared statement, and then, as he does, there will be a Q&A session with reporters. So the market can get quite volatile during a Fed announcement. Nothing like the old days. The old days when nobody knew what the Fed was doing and it was all very secretive. It was just bonkers on Fed day. It's not so much the same anymore, but hey, with so much going on today in the world, from pandemics to politics, there's no telling what he might say, and there's no telling what the markets might do. And so the best advice that we can give you is, during the Fed announcement, do nothing. Don't go long, don't go short. If you have to tape your hands to your desk chair, just do whatever it takes, all right? Okay, let me refresh my data. I talked so long.
Oops.
Markets
I'm sorry, I am
changed.
here.
Hey there.
I'm here.
Okay, all right, the Dow's up 133 points. NASDAQ is down 166. S&P 500 is down 15. The Russell 2000 is down 14. The mover and shaker there is the NASDAQ, which is down 1.25%. In the commodity basket, crude oil down 69 cents, trading 64.11 last. That's a drop of a little over 1%. Gold down $5.50, trading 17.2540 last. Silver up a penny, trading 26.01 last. In the Asian markets at the close, Nikkei dropped 6.5 points. Shanghai fell just over 1 point, and the Hang Seng gained all of 6.5 points. So pretty quiet trading around the world as we await Mr. Powell. In the European markets, the FTSE at the close down 32, the DAX up 26, the CAC up 3. So some pretty quiet sideways trade. It is, however, a mixed day in Asia. It is a mixed day in the UK. And so far, with the Dow being the only one in the green, it is a mixed Radio Wednesday here in the US of A. So with that, we'll hop over to Michael. He'll give us a recap of everything that happened this morning in the live training room. When he's done, I'll be back. We'll go over the logic alerts, the concierge trade alerts, take a look at some daily charts, and then top of the hour, we'll talk to David Grant. And then bottom of the next hour, if Garrett got his headset in the mail, we'll talk to him. So Michael, it's all yours. I can see your charts.
Excellent. Okay, let me just get this ready again. Yeah, it was an interesting
morning. Crazy
morning.
Stomach ache this morning. I almost didn't think I was going to make the show, but then I just
that's awful.
Reclined for a few minutes and it seems to have gone away. So I don't think I didn't get food poisoning or anything. I had a sandwich from Subway last night. It's typically a pretty safe place to eat, so I don't think it's anything like that.
But you feeling better now?
Yeah. Oh, yeah. Oh, God, much better than when I was first awakened by the stabbing pains, which have subsided. So that's a good thing.
Well, I'm glad that they have subsided for you.
All right,
somebody likes to wake with pain. All right, here we go.
All yours.
Good afternoon, everyone. Yeah, happy St. Patrick's Day. Today is Wednesday, the 17th day of March, 2021. If you've not taken a free trial with us and you want to go to the homepage at cfrn.net, scroll down the right here where it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, you don't get the free trial, all right? Now, the results. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as Dwayne has said, is FOMC day, so the trading was a little tougher. I mean, we got the goal pretty easy early on, but it was kind of a tougher day. The last couple of days have been. You can see by the overall numbers compared to what we've been doing on the month. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 17th day of March, 2021. We lost 8 ticks in crude, made 35 ticks in gold, and 38 ticks on the ES. Put us at plus 745 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades this morning. So on the month now, we're up $13,510 a contract. That's over 13 trading days, averaging $1,039 per contract per 2-hour trading day. So far on the year, we've made the goal 50 out of 51 days, and we are at $44,995 per contract. That's averaging $882 per contract per 2-hour trading day. Okay, let's get into it. I'll do the crude first because we had the fewest trades here on crude. All right, so we started out with crude in the pre-market right here. Crude was doing pretty well. It had some nice trades. One right there, one right there, one right there, one right there. Then we had a break-even trade right there and another break-even trade here. And then it was in a slow grind down and it was choppy and I was putting out levels where I thought it would get down to and it just took forever to do it and wasn't setting up here in the slingshot to give us the trades. Finally, toward the end of the session this morning, we did get a setup in the slingshot right in here and we stopped out. Handily, I might add. And we haven't had another trade set up really since then. There was one bounce here that gave just a little profit, but not too much. That was really it. I mean, there's a long trade from right in here, 64.26, and if I go back over here, 64.26, it's looking to get up to 64.37 right now. 64.37. The pullback area is 64.24, so it doesn't have a strong pullback area, well, at least not one that's far away. And it's looking to get up to, what did I say, 64.37. So right now it's looking to get up here. All right. Now it's just been kind of crazy, and we did have crude inventories come out today, so that sort of had an effect on it as well. I didn't even go and see what the crude inventories were. Let me go and check on that for you really quick. Yeah, let's go here. Go here. See all this high impact FOMC stuff coming out this afternoon. But the crude inventories came in with a little bit of a draw, which is, from week to week, they have been so off the last few weeks. So off. It's surprising to see them be even close right now. But anyway, the ES, let's get back to that. Okay, so we started out with the ES right in here. We ended up with a break even. Then here we had, oh, wait a minute. Yeah, we had a break even. Then we had a +8, then a +1, so we were at +9. Then down here we had +5 to put us at +14. +4 to put us at +18. Then over here we went from 18 to 28, so we had a +10 right there. We missed a trade here that would have given some nice profit. On this one, we picked up another. I went from 28 to 36, so we picked up an 8-tick gain right there. And then we had somewhere in there was one more 2-tick gain to put us at +38. I don't remember where that was exactly. Probably right in here. A 2-tick gain to get us to +38. I think I was looking for it to get up to this level right there, which it eventually did, but not while I was in it. Since then, during the break, there was one shorting opportunity. No, that wasn't. Sorry, I take that back. There was long opportunity right here. Just one, just the one. And that was it on the ES. Now gold is where we got our goal for the day to begin with. Had some pretty good pre-market action in here. You see all that. And then we get all the way over here. Our first trade of the day on gold was right here. We picked up 10 ticks. Then our next trade, we stopped out to put us back to +2. And I had started drawing in all the levels I thought it was going to get to, and it did get to them. There was a long trade right here that went up to here and then went to the secondary level. For some reason, I was not in that. And I said it was going to pull back down to here. It took it a while, but eventually pulled back within a tick right there. And then if you stretch this all the way out, it did actually hit it over there. It started moving around. I was given the levels that I thought it was going to trade to, but we had to have the slingshot agree with us to give us the trades. And right in here, we need to break away from dynamic support, which we did with this bar, and then it gave a shorting opportunity right here that for some reason I didn't get into, but that went down to all the levels that I had said except for this one, which it didn't do until right over here. We then stopped out right here, and so we went from, we were at 10 and 2, then 11 and 17. Then we dropped down to 9 right there, +9. Then we picked up 2 ticks to put us at +11, then 4 ticks to put us at +15, then 2 ticks to put us at +17. Then I was getting these little tiny trades over and over again. 1 tick to put us at +18, 2 ticks to put us at +20. Then finally we had a 10-tick trade to put us at +30, and then 5 more ticks right here to put us at +35. Then we get into the break here, and I didn't give anything as far as the break goes because I was in the middle of something else right at that time. But that was our morning session on gold and crude and the ES. So if we jump back here to this page, and we start here with the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, the 17th day of March, 2021, we lost 8 ticks in crude, made 35 ticks in gold, and 38 ticks on the ES. Put us at +745 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 23 trades. On the month, now we're at 13,510. That's over 13 trading days, averaging $1,039 per contract per 2-hour trading day. So far this year, we've met the goal 50 out of 51 days. And on the year now, we're at $44,995. That's over 51 trading days, averaging $882 per contract per 2-hour trading day. Okay, $882 per contract per 2-hour trading day. Now, if you have not taken a free trial with us and you want to, go to the homepage here at CFRN.net, right here at CFRN.net. All you need to do is scroll down to where it says free 5-day trial. Click on that, and it's going to bring you right to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge, so we can tailor one-on-one training just for you, and then hit the send button. Once you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click on the confirmation link, you won't get the free trial, all right? Because we don't know that you took it until you click that link, all right? All right, so with that, I'll pass it back out to Dwayne. Fabulous Phoenix, Arizona, hopefully feeling better. Overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay, well, I'm hoping that he's feeling better. And that's, I don't know what that is. I'm sorry, the text message just came in. All right, so while we're hanging out here waiting for Dwayne to come back, let's just look here at the ES. ES looks like it wants to get up to 39.40 right now. And the pullback area is 39.36. So let me draw in the lines on that. Hang on, let me come over here. Make it so I can draw in the lines. My new trick. 39.40 and 39.36. Those are the areas the ES is trying to get to right now. Now this would be the pullback area, this 39.36. You see we have bullish separation down here, or in an uptrend. So it's really trying to get here, but this is just the fallback area where it should find some good support and start moving up. If it doesn't do it before then, it should do it there at the latest. On crude oil, I'm looking first at 64.37 and then at 64.45 on crude. So the 64.37, I already had a line there, but the 64.45, I didn't have a line there. So that's the next level. If we get up to this level, we should find that level. On the downside, on the crude, 64.25 seems to jump out at me, 64.30 and 64.25. Now we're right at the 64.30 and I already have a line there at the 64.25. So that hasn't changed in the last few minutes. Gold on the upside, 1726.6, and on the downside, 1724.8. No, I don't think I put any lines there. No, I didn't. 1726.6 on the upside, and you see we have bullish separation with a bounce off the BBC happening right here. And 1724.8 to be down here on the downside. Now the chart's suggesting it's going to go up. It may pull back first, but right here would be a bounce off the BBC, suggesting it's going to make it up here to 1726.6 before it pulls back. Okay. And so that's what you got to look forward to in the next few minutes. I don't know if Dwayne's available yet. Yeah, that's okay. It's all good. Just looking at what should happen.
I am ready to take it if you're ready for me to take it.
Yeah,
Are you
sure.
in the middle of something
Go
you
right
want to
ahead.
wait and see it play out, or?
Well, I drew everything out there. If everybody marked it down, they should see it play out here in the next couple of minutes. The cycle's starting to go down really steep on the ES, so if it's going to happen, it's going to have to happen right now. The cycle's already gone down really steep on the crude. So on the crude, what we might look for is actually another downside, and that would be down at 64.15. Okay, because what's happening right now on the crude, originally it was moving up right here. We're in an uptrend, it was moving up, but then on this leg down, this was a larger than anticipated leg down. Well, not really. I expected it to get down to here, but it turned the cycle right down, and I had mentioned that earlier. And so what it's doing is setting up a short trade now. And so this was the pullback area, and it still is, but now it's the pullback area for a short trade, not a long trade. And it should send it down here to 64.15. Now over here on the gold, this was the pullback area, but this became the target area because the chart said it should go up from here. And this was a bounce off the BBC, which in this case, your stop would have gone to break even at this point. So you'd have no risk on the trade, anticipating a move up to at least 26.6 and possibly up to 27.2. So if I were going to put another mark on this right now, I would put it right up here at 27.2. Okay, so what will probably happen is we'll get a move up here. We have dynamic resistance right here printing. So we'll probably wick through dynamic resistance, hit that level, take that out, then retrace, and then make it up to this level on the second leg. Well, that would be the third leg of this move. And over here on the SSI goes just going down really steep.
The next weekly zone on gold overhead is up at 1731/32.
Yep, and it'll probably build a whole other leg into it after that.
And then below is way down at 1715/16.
It's a long way down there.
Yeah,
it's a long way down.
Now, guys, over here on Michael's ZS chart, see how he had that bullish cross right at where the YBR is. We had a bullish cross, we had a leg, and a retracement, and a leg, and a retracement, and a leg, and a deeper retracement. But that pullback ultimately held because all those candles are still touching the BBC. So when I go through daily charts and 30-minute charts, it's important to understand that we're doing the exact same thing. The only difference is the time frame. The range chart is fast. It enables Michael to show you many trading opportunities across multiple markets during each 2-hour class each day. But when you move out to a 30-minute chart, I mean, over the course of a 2-hour period, he might only be able to show you 1 or 2, trade setups that fit the rules. So I know that when you look at his chart, you look at my chart, it's like, which do I want to do? Well, we're doing the same thing, we're just doing it in different time frames. And with the larger time frame, we bring market structure into the picture for setting stop loss. Whereas in the room, Michael uses an 8-tick hard stop on everything across the board, because the important lesson he's teaching you there is that you must always have a hard stop in place. And to keep things simple, just across the board, 8-tick hard stop. Once you learn the strategy and the methodology, of course, I'll spend time with you. We'll talk about market structure. So as you move into larger time frames, if you choose to, but you should know that the alerts, the logic and the concierge are based off of a 30-minute chart, but using the same indicators, same methodology, same strategy, everything. Okie doke.
There. Okay, and this is pretty much doing everything.
Yep, you said that thing about the wick going up through that line. Yep, that happened.
And it's pulling right back down, giving another opportunity on the long side. So this is what I would look for right now. Let me see if I can see it beyond that. 17.
So even on this chart, this gold chart, bullish cross, price pulled away, price pulled back to the BBC, up close, another leg, higher high, pull back to the BBC.
It does this over and over again every day, guys. It's just how the markets work.
I'm gonna have to ask you to hold for me just 1 second. I'll just be right back. Okay.
Yeah. All right. Now I hear Dwayne's phone ding. So what we're looking for here, we got a low here of 26.3. I mean, I would go long right here normally because we closed right on the trend line. So you'd go long right here. We haven't broken dynamic resistance yet, but this is an entry below the MA1, so it's okay for that. Now, as we progress up here, I should have looked when it was up here. I could have given you another level up above that probably. But as we progress here and we get up above dynamic resistance, I should have another shot at it. Now you see how the cycle's gone way down over here on the ES? And it's gone back down to that pullback area. Now the pullback area held here, and it gave you a YBR trade right here for that bump up. Now that bump right there is all you really need in a day. That's a couple of points. That's all you really need in a day. But you can see it's pulled back here and it's testing again right here. And what I think it's going to do right now, it doesn't really have anything strong on the downside. 39.34 is the downside, and 39.38 is the upside now. So as this thing kind of morphs into a shorting opportunity instead of a long opportunity, based on the slingshot, what the slingshot's telling you here, you got to wait for these pieces to come together. They're not together yet, so you don't have a trade here yet. But what I want to see is this bar close down. That'll drag this stuff down and give us the pieces that we need up here. There it is. There's the down close. There's the cross. There's the pull away. So now all we need is a pull back up. Okay, we get the pull back up, and then we should be good for the trade setup on the short side. Now I'm looking at 39.33 possibly on the downside, so it could go down a little bit lower than what I just said right here, down here to 39.33 possibly. Still looking for the pullback to give us a trade setup though. Okay, we didn't get that pullback yet, and still waiting over here on gold. So the markets right now, I mean, this is how they've been a lot of the time today. You can see stuff and it'll do it, but it's going to take forever for it to do it, and that's what it's doing right now.
And the markets are, of course, awaiting the Fed announcement at 2 o'clock, and then there'll be a press conference at 2:30. And Fed announcements are not, as I said earlier, they're not like they used to be, because the Fed used to do everything in secrecy. They never knew what they were thinking, what they were planning, and that's changed. It started to change with Helicopter Ben, and then it continued changing with Yellen, and now with Jerome Powell. I mean, there used to be an interest rate announcement, and that was it. And then a couple weeks later, you got the minutes of the Fed meeting. In other words, what they actually talked about. But this whole press conference and Q&A, and that is a relatively new thing. And it has tamed the reaction to the Fed announcement quite a bit. But it's still very important. And while I don't think anyone expects him to change the interest rate today, it's always a possibility. It is called the interest rate decision. But what everyone will be listening for is the accompanying language. Where's our economy? Is it recovering? Is it headed for trouble? When the EU held their conference the other day, they talked more about trouble ahead than they talked about, good times are back again. So, okie doke. So you ready for me to grab them?
Yeah, go ahead.
Okay.
You can grab that.
Alrighty. Okie doke. Again, we got David joining us at the top of the hour, and then Garrett joining us at the bottom of the next hour. So we'll jump right to the Logic 247 alerts. And I'm guessing today must be St. Patrick's Day.
It is indeed.
Got a little shamrock here. Thank you, Val. Happy Shamrock Day to everyone. St. Patrick's Day. If you don't know the story of St. Patrick and why it's even a day and why it's celebrated, which I'm sure most of you do, but if you don't, Google it. Maybe your kids don't know. You can tell them. Okay. Now the Logic 247 alerts, they are windows of opportunity as defined on a 30-minute chart. When opportunity presents itself, we send out an alert live in real time based on current price action, showing you the window of opportunity, the entry, the potential resistance or support, and then the final trade to target. Each one of those alerts has time built in for you to hear the alert, get to your computer, look at your chart. You should never trade an alert just because it's an alert. You should use it as a learning experience, because what Michael has taught you in the room, when you go and look at the 30-minute chart and look at the alert, you should over time start to see the window of opportunity, because that's our goal. Our goal is for you not to be dependent on us forever to give you alerts to tell you when to get in, when to get out. Our goal is that you learn how to do that for yourself. Now, we hope you'll stick around and be a part of the community forever, because you do have a lifetime membership. You have access to unlimited one-on-one mentoring, but use these windows of opportunity as the training tool they are intended to be, so that you learn to spot these windows of opportunity yourself over time. Over time, it goes from being an alert to more of a confirmation. Because if you're sitting there watching your charts and the telegram alarm goes off on your phone, your tablet, or your PC or Mac, instead of you trying to find the window of opportunity, it probably confirms what you're already seeing on the chart yourself. And that shows you that you're progressing. You're getting closer and closer to that day when nobody's telling you when to get in, when to get out. You're able to just see it for yourself. Our methodology and strategy is very simple. So we open Sunday night, 6 p.m. Eastern. The alerts start flowing, and they flow around the clock based on current price action till Friday afternoon at 5 p.m. Eastern. This week we've issued 43 alerts, 5 never triggered. Still waiting on the results of 4. We've had 34 actionable alerts, of which 6 were stopped out, or 18% of actionable alerts stopped out, based on our risk profile model of not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step methodology that we teach you. Now the individual alerts look like this right here. The last alert we put out today was number 6,892 over the last 137 weeks. Every one of them a trend trade as defined by a 30-minute chart, and whether price is above or below the BBC. That's the green line on the chart. Stands for bull bear cross. I'll show it to you in a second. So on this alert, this is gold. The idea behind the window of opportunity was to be short 1725, initial target 1724, then the second target, third target, final trade to target. Okay. This is one we're still waiting on. Crude oil. S is sell, B is buy. So the idea here is to be short the NQ, 955, initial target 945, final trade to target. Red X means it was stopped out. This was a short on gold. This is a short on the NQ, short on the Russell. And we're not getting a lot of follow through, okay? Because a couple reasons. One, we had rollover. 2, we had a time change. Today we got a Fed announcement, and we're at all-time historic highs across most of the indices. And the question is the bull going to keep running, or does the bull need a deep rest? In other words, a deep retracement. And so we'll look at that when we go to the daily chart. Still waiting. This was a long on the Dow. Okay, there was only 20 points to the weekly trading zone. Whenever you see this, that's what that means, because most of the time there will be multiple targets. On a long, potential resistance, potential resistance, potential resistance, and then you can think of it as resistance, you can think of it as a target. It's really both. Long on crude, short on the NQ, still waiting. Short on the S&P, no trigger. Short on the Russell, stop out on the Dow, no trigger, no trigger. Short on crude, short on the Russell, stopped out. Long on the S&P, long on the NQ, long on the Russell, long on the Dow, long on the ES, short on the Dow, stop out on gold, short on the Russell, short on the S&P, short on gold, stop out on crude, short on the Dow, and now everything else is what happened Sunday night, the 14th. So long on silver, long on gold, long on crude oil, long on the NQ, no trigger on the Russell, stop out on the Dow, and a long on the S&P. And so that's how week 137 has gone so far. Last week, week 136, we had a total of 100 alerts exactly. It wasn't planned, it just happened. 22 never triggered. We had 78 actionable. 14% of the actionables were stopped out based on not risking more than $300 per contract per trade. Now, we accompany those logic alerts with the concierge trade alerts, and they are not based on current price action, they're based on historic price action, and they're posted once per session shortly after the Globex Open. Globex opens every night, so the Wednesday session began Tuesday night at 6 p.m. Eastern, and so at 6:10 p.m. Eastern this was published. The way you read it, it's simply if price starts trending up towards 39.77, that's bullish, and we'll be looking for long logic alerts. You'll be using the strategy and methodology that you learn in the room every day. You'll be looking for long setups, and then once we get above 77, then we only look for longs. And if price starts to drop to 39.49, to that line in the sand, that's bearish. So you start looking for short trade setups based on our strategy and the logic alerts. Remember, these are based on historic price action. Logic is based on current price action. So now we'll travel over to our daily chart of the S&P. Okay, we had, and if you leave your charts running all the time, when you go to your daily, it's always a good idea to just put it on any other time frame, then go back to daily. That just refreshes everything. Now these are notes from the other day when we had put in a new all-time high. This was the previous all-time high, and then on this day we put in a new intraday high and a new closing high. This was on Monday. Yesterday, Tuesday, we put in a new intraday high, but not a closing high. Well, let's see. On Monday, the market closed at 39.5675. The intraday high was 39.60 and a quarter. And then yesterday, the close was 57.50 versus 56.75. So the closing price, 57.50 versus 56.75. So we had a slightly, very slightly new all-time closing high in the S&P, and we got a doji. Now, we talked a lot about this bearish engulfing candle, and I said that for me, that's one of the strongest potential. It's the strongest heads up that a reversal may be coming, okay, in the proper context. And the proper context is you have a nice up leg, okay, and then the bearish engulfing. This high is higher than the previous day's high. This low is lower than the previous day's low. Some people would call that an outside day. If you speak candle speak, bearish engulfing, and sure enough, it led us to quite a retracement from 39.4775 all the way down ultimately to 37.1050, and then we charge higher. Okay, we had a red day here when we hit the BBC, but then the next day we overcame the BBC, and so we had 1, 2, 3, 4, 5, 6, 7, 8 candles in this session, 8 daily candles, with one red candle. So 7 green candles, that is proper context. And then a doji represents indecision between buyers and sellers. Now, when you see a doji like that on a daily, it's really kind of a big deal, and the whole world sees it, because not only retail traders, but especially institutional traders, always have their eye on the daily chart. Now, the opening price you'll see for yesterday, the opening price was $39.57.75. The closing price was $39.57.50. So there was exactly 1 tick difference between the opening and closing price. Although during the course of the day, price did run all the way up to here, and it did run all the way down to the high was 70.75, the low was 42.75, but then the market closed basically right where it opened. So you had a whole day of trading to end up right back in the same spot. So we opened last night, we had a few ticks higher, and then came the red candle. Now, we talked yesterday about, on the way down, the first logical spot for the market to find support would be at the step line. Below that, blue and climbing, which just so happens to line up with the 24% fib retracement from this low to this high. And I think I can do a little better job of getting that a little closer to the low. The low was 37.10.50, and so I got it to 37.10. Okay, so now the 24% fib of the entire move up from the end of October low to this new all-time high. This is the 24% fib retracement, the shallowest possible fib retracement of the entire move up. But we're also looking at fibs of just the last leg up. Now this 24% fib, that will be important, and the fact that if price drops to 39.10, it's also going to hit blue and climbing, which is bullish, which is potential support. So if the market starts to drop, look for support here, and if that fails to hold, then the BBC, which stands for bull bear cross. What that means is when price is above the BBC, we're bullish, looking for higher prices. So when price retraces to the BBC and holds, and it holds more often than it doesn't, that gives us an opportunity to be long no matter what market or time frame. Everything we teach is fluid across all markets, all time frames. Pull back to the BBC, another leg. This time the pullback didn't hold. The pullback has to not hold at some point, otherwise we'd have a sideways stagnant market. Now, this pullback at the time, because this was the all-time historic high when this pullback happened, this was not the 38% fib of the entire move up, because we went from the October low to the then current high, but now we've extended to this high. So the fact that the current 38% fib retracement does line up with where the market found support on this major pullback is important, but that's bigger picture. Just focusing on the last leg, numbers to remember: 39.10, and then the BBC's at 38.84, and then 38.72 is the 38% fib, and that's right where the bullish cross happened. Okay, I suggest every day that you start, whenever you start your trading session, when you sit down to trade, look at the daily chart of the market that you're trading so that you have an idea of where major support and major resistance is, because often on the smaller time frame you won't be able to see that. It won't be evident. If price can get back to this high, we expect that to be good resistance until proven otherwise. And if price drops to this area right here, we certainly expect that to be good support until proven otherwise. Right now the step line is serving as good support until proven otherwise. Okay, so with that, let's jump to the 30-minute chart of the S&P. Okay, last night's session The opening candle was right there. So we ran up, we hit the weekly trading zone, 39.59/60, and we had a retracement. The resistance took us to the weekly trading zone at 46/47. When the market runs into resistance that it can't overcome, price will turn and go look for support. The market found support at the weekly zone, which drove it up to the BBC. Now, just as pullbacks like this to the BBC hold more often than they don't, when price pulls up to the BBC from support, we expect that to be good resistance, and it was for a number of hours. Price just consolidated right along the BBC. Then we made the move down to the weekly trading zone below, 46.47. Now, it held as support here. It held as support here. We finally traded through it. Only three things happen at a weekly zone. The most likely thing is consolidation. You see it over and over. Second most likely is rejection, which is what you see right here. The only thing left touching the zone when that candle closed was the wick, so price got rejected. Now the third and final thing that you'll see, and that's only about 5-10% of the time at the most, is the slice, where price slices through a zone like it's not even there. Typically what happens on a slice is price retraces back to the zone it sliced through and then continues in the direction of the slice. We did not get that pullback this time. Now this bullish crossover here, we expect that to be good support until proven otherwise. And so, true to form, price came down, hit that support area, bounced to red and falling, okay, and then it reached all the way down to a weekly zone from last week, bounced back up to red and falling, back down to the previous weekly zone, back up to what was once support, has now turned into resistance, and red and falling starting to sort of just cup underneath this candle. Now when price is falling, you want to have red and falling. You want your step line on the left side of red and falling. That's bearish. It represents resistance. See how we had resistance here and here and here. But once price starts, or the red and falling starts to curl like this, and it gets directly below price, then it becomes support, potential support. Okay, so I don't expect the markets to do much of anything between now and when the Fed announcement comes out, and that's going to be about 2 hours from now. All right, the CTAs. Now this is the static report that's published shortly after the COVEX open. Last night the long side was 39.77, which obviously was never touched. Now these numbers are good for the entire session. It's forward guidance for the entire session. 39.77. Okay, and then on the short side, remember you put two lines in the sand, one on the long side, one on the short side. On the short side, 39.49. So for 39.49, we went down to the zone at 46.47, which we expect to be support. That sent price back up to resistance, and you'll notice here how price just walked this CTA. The CTA often acts like an iron curtain. Price will come right up to it, turn, head the other way. Okay, what you're looking for is a substantial move through the CTA that's backed up usually by a logic alert or your own understanding of the methodology and the strategy. And so we traded down from 39.49 to the zone, back above the trigger, and this is where we sliced through the zone. And typically, when that move runs out of steam, the retracement will be right back to the zone it sliced through and then continue in that direction. But there was enough bearish pressure in the order flow to prevent that from actually happening this time. So we're just sort of consolidating here at that previous bullish cross, and we've got support at last week's zone, 39.30/31. So let's jump to the Dow real quick. The numbers for the Dow last night was 32,895 on the long side, which was never touched. And on the short side, 32,630, which also has not been touched. It's rare the day when neither zone gets touched, but we are in a sideways consolidation. Remember, on the S&P we had a daily doji yesterday, so just kind of treading water, waiting on that Fed announcement and whatever it may bring. Okay, on the Russell, the numbers last night, the long side for the Russell was 23.39, which we can see was never touched. 23.39, and on the short side, 23.10. And that happened right here. Now, last night's open was this candle, and it was during that 30-minute candle that the alerts, that the CTAs came out. And so the first move down took us from 23.10 to 23.0240, so we'll call it 23.03. So that's a 7-point move, $50 a point, $350 per contract traded. Price gets back to the trigger, but the market structure has changed. You see, on a short, you want that red and falling. Here, getting short from the trigger again, you're shorting right into blue and climbing, not conducive. And then price kept pulling up to the BBC, couldn't drop. Couldn't get above, drop. Couldn't get above, and then we finally got this drop down to 22.89. Okay, and we're just consolidating sideways here at the BBC. All right, next NQ. Numbers last night for the NQ on the long side was 13,205, which was never reached. And on the short side, 13,094. 13,094. It's going to be right in here somewhere. Yeah, so from 13,094, it was a 20-point drop to the zone, and a 20-point drop at $20 a point is $400 per contract traded. Price went right down to the weekly trading zone, which is 12,924/25. We expect that to be support. When the market finds support, it goes and looks for resistance, and there was two reasons for resistance here: weekly trading zone and the BBC. And so that sent us on another leg to the downside, back to the weekly trading zone. Zones are an area, okay, just like fibs. They both put an exact number on your chart, but it remains an area. It's important to always remember that. Okay. Okay, next, crude oil. Okay. So on crude, the long number was 65.85, which we can see was not touched. The short side was 64.30, which was touched. 64.30. Okay. Important prices, important areas, almost always tested. So from 64.30, we traded down to 64.04. So basically a $250 per contract move. Then we got back above the trigger and we dropped to the weekly zone, which is the lowest weekly trading zone for this week, 63.75/63.80. So the market found support, back above the trigger, triggered again, got back above the trigger, triggered again. So we have 1, 2, 3, we had 4 triggers off of one alert. Not unusual, happens all the time. In fact, when an alert is triggered, there's a greater probability of it triggering multiple times than not triggering multiple times. And it's 2 minutes after, so let me check. David must be here. He is. Before we end up today, after we talk to David, I'll hit those last two markets, the gold and the silver. So David, let me make you the presenter and open up your mic. So stand by. There you are. Make presenter. Yes. Okie doke. David, welcome to the show.
And good to be here, Dwayne. It's always fun being with you on Wednesdays. Sorry I missed last week.
Yeah, no, I know life happens to all of us, but we missed you.
Yeah.
And we're just glad to talk with you today.
Hey, we're happy to be here, and we're going to keep this nice and tight and short today. We're going to crunch a few numbers and talk about numbers from kind of a spiritual perspective as well, but to really get our heads around what we're all about here in that. I think it'll be fun for everyone, and kind of highlighting though the value of really the numbers and people. Like, it's really kind of fun to do, and so that's kind of the direction I was thinking about, Dwayne. Okay, and because we talk about 1022 all the time and connecting humanity, and what does that mean? And 2 by 2, we've been talking about what's 2 times 2 times 2. Those are easy numbers to work with. A lot of people are like, well, what's the product and what are we doing? Well, we're actually running a financial services product that is in the world of cryptocurrency, and we're using a global money system, which is what crypto is all about. It's not centralized in any national archive or debt-based treasury that's out there these days. We're actually into real money that people are deciding its true value, and we've been seeing that with all the talk about Bitcoin these days, right? It's just a massive conversation going on with Bitcoin. Where's the limit? Where's the heights of where it's going to go? And it's crazy big, but that's the world of crypto. Which, when you really think about it, it's been around for just over 10 years, and it is in the history of money that it's never been done. In 5,000 years of our understanding of money. We can go back further, but 5,000 years is pretty sufficient. What we're doing in the world of crypto has never been done in 5,000 years of history. So it's fairly significant, I think. Mm-hmm. So, I agree. And then what we're doing is saying, okay, we have this revolutionary idea of people using money globally, not tied to a national currency. And now, how do we get people to connect globally? And that's what 1022 is all about. The money, we say people first, money follows. So that's what we're going to look at today within our idea. I use this all the time, Dwayne. You must be sick of it, or I'm not sick of it ever. But
that's one of my favorite words.
Abundance. But I think people really struggle with the word big time, because it has a small part of it has to deal with money, but the bigger part of it is how we interact with each other and how we enhance each other's lives. Abundance, if it's just accruing of goods and money, Quite frankly, Jesus talked about the guy that wanted to build a bigger barn, and he's saying, hey, that ain't a good plan. You're just trying to hoard all your wealth.
Something
That's
like,
not abundance.
"Oh, you fool! Your soul is required of you tonight."
Yeah, you kind of miss the point of, what do they say? You can't take it to the grave. Well, a lot of people are
I've never
it
seen
away.
a U-Haul following a hearse.
Well, but you do have where there's a will, there's a family, so there is that.
That's good.
But really, we're wanting to really do something pretty special with what we're doing and that. But this word abundance just resonates so deeply with us, because the idea of receiving and gratitude, compassion, and giving. And I have people who we've really supported a lot and still don't really understand this yet. And eventually, we believe everybody will get an understanding. The light will come on and they'll see the value of it. But at the front end, most people are dealing with this. And this is what we've been trained in. This is what we've been programmed in. I'm a big fan of Charles Eisenstein and his insights into the world of economics. And he's got a great book called Sacred Economics. But this is a pretty powerful quote from him. The power to induce a collective hallucination of scarcity is only one of the ways money affects our perceptions. A collective hallucination of scarcity. Most people, I'd say the vast majority of the world is living in scarcity. And I'm not talking poor or rich. I'm talking everybody. The very rich live in total scarcity because they're like the guy that builds bigger barns. That's what they do. And that's scarcity. Building a bigger barn is a scarcity model. Storing up for, treasures here. Well, we have incredible treasures in here that we want to bring into our world. And that this is an amazing quote, though, when I really dig into it, where this is what we're dealing with, because people are under the scarcity spell and they don't even know it. And it's a big deal. And we're trying to heal that and bring things back to a more sensible approach to things. And we call it 1022. And so what is and we're really highlighting today the value of doubling. A lot of people on your show are traders, and they're looking at, imagine if you could double your account every week. Would you be happy with that as a trader?
I think most people, if they could double their account every year, would be very happy.
They'd be very happy. I had a friend, and he's getting into trading, and he was like, "Hey, everybody, come join me. We're going to make 5% a day." And I thought, okay, you're a newbie, I get it.
That talk's a little scary, but because, once you say he's new to trading, well, it looks so simple, But
a 5% growth rate would make you a millionaire.
Right. Once you get under the hood, you find out it's, there's a little more to it.
Well, 5% means you're doubling every 14 days.
Yeah.
That's a big deal. And that's, again, just not understanding the numbers all the time. But I do want to talk about doubling from the sense of the strength of a village. And 1,022 people, these aren't numbers anymore. These are real people working together. Some bring in all kinds of different strengths, and some bring in a lot. Some bring in little, some bring in a lot. To get 1022 simply means we have to average 2 people coming into our village per person. Average. That doesn't mean every single person has to bring in 2. It means we have to average 2 per person to get a doubling effect. And that's very, very doable when people choose to work together, choose to share together. And that's what we're doing, is that whole sharing economy. And that it breaks down this way, and you've seen this before, of if people would simply embrace this 248, this is what doubling looks like. And it goes down into our level 1, 2, and 3. Anybody that builds with this 248 model, Dwayne, could you manage to get 2 people to join you in some venture in a month?
Probably.
Yeah. Hey, do you think you could double that in the second month?
I think so.
Yeah, like it's doable, right? It's within reach. And you think that could double again in the third month? Now, this isn't about you. This is about your friends bringing in their 2, right? So, again, it's everybody working together. But is this doable? 248. Is that a doable idea for people? Could people get their heads around this? I think it's a fair number, right? 1022 is a little overwhelming at the front end for people. I get that. But 248, per month, doubling every month. How many months would it take to get 1022 at this rate?
That's a good question.
What do you think the answer is? Make a guess.
Boy, you put me on the spot. I don't have my calculator handy. Let me say a year.
Well, if you look at the in 9 months, if you look at the top here, the 1022, no one left behind team building strategy. That's based on doubling every month for 9 months. That's where 1022 comes from. So 9, that happens 1, 2, 3, 4, 5, 6, 7, 8, 9, and that is your 1022. That's what doubling looks like. It's kind of crazy when you think about it, but it's just these 2, 4s, and 8s that really make it rock for people. And but it starts off so small, right? It starts off like, hey, a couple of people. I got 20 people on my team. Well, in 3 months, that's beyond. In 3 months, that would be beyond our 1, 2, 3 month model of doubling. And I have people, I only got 20 people on my team. Well, okay, but that's on track for your 1022 in 9 months. It's really that big a deal as people embrace it. And averaging, and this is the fun part about this, though, we're looking for a finite number. Typically in business models, it's almost infinite numbers that you need to be going for. You never stop, right? You've been trading for how long, Dwayne?
Futures since 2005, stocks since 2000.
All right. And, are you ready to retire?
Am I ready mentally, physically, or financially?
Financially.
No.
And typically we end up in a lot of fields where really it's just always making enough, but never having it create residual income. We always have to kind of put the nose to the grindstone and make it work. And I'm not belittling that. I'm saying in our 1022, though, once it's done, you really are done, and you have a cash flow potential of anywhere from 5,000 to 50,000 to literally infinity when it's done well, with 1,000 people. How does that sound to you? Like infinite potential finances with 1,000 people.
That sounds good.
Yeah, and would you put a year into it to get an infinite financial base?
Yes, I would.
For the rest of your life, and pass on to the next generation and legacy and generation after generation, because it's a business, and once it's working and the company's rock solid with it all, that's forever. That's forever for your family.
Yep.
Is that worth a year of your time?
Worth a year. I think most people would agree.
That's what we're talking about here. And it's a finite number. Typically, when people come into a networking system, there's really no end of it. You become a living commercial for a year, 2, 3, until your family's so sick of you talking about it that you're either going to shut up or you're going to get kicked out or something. And that's not an uncommon experience in that. And you become a living commercial. I just want to get this done for people, and then they can go live their lives with good financial sustainability in that. This particular quote here is, again, from Charles Eisenstein. You can see I'm a bit of a fan here in that. I like his approach here to spirituality, and because he connects it to money, and he connects it to everything. But let's read this through. Spirituality, in other words, is not about that which is beyond materiality. It is about what the modern worldview does not recognize or cannot see. It therefore has everything to do with economics. Because and literally, and I'll pause here for a second before I finish the rest of the quote, because economics is the base for how we thrive spiritually as well. It's a really significant thing. So customarily, modern people think of spirituality as something outside of relationships of money, matter, and the flesh. But it really should be about reclaiming their sacred dimension. After all, what other great reset? If we're looking at a great reset in our world, and we need one for sure, why would we settle for something that is not holistic and caring for everybody in the world? I give everybody $5 million today. I just have a magic wand and I throw out $5 million to everybody in the world. 5 to 10 years from now, everything would still be as it is today. It would all it would all go back to the few, and with the many struggling still. It would not solve it.
Sadly, that is true.
It's just, yeah, it's kind of just the way we are, right? It's just because we need a different mindset towards money. That's the big challenge here. And that's what we're doing in our village. We're changing our mindset to how money can work and how it is that we're able to attain it, and then how we're able to use it in an effective way. And actually get some pushback in the company a little bit sometimes with our 2x2 model. And that because it kind of ignores a little bit of the compensation plan and all of that. It just makes everybody really rock solid financially. I don't know why I'd get pushback on it, but we do a little bit from time to time with various ones who question that. And this is kind of where I come from. This is a quote that's often attributed to Gandhi, but it was actually first penned by Nicholas Klein. And first they ignore you, then they ridicule you, and then they attack you and want to burn you, and then they build monuments to you. I don't really need a monument or anything with what we're doing. But at first it's like, yeah, that's just like, I've had lots of people in the company, Dwayne, yeah. David, they kind of pat me on the head and say, oh, yes, David, have fun with what you're doing. And they just kind of ignore me. And now it's getting, that's actually showing a different way for this. And now I'm kind of at that a little bit at that third stage in the model with some people. It's kind of weird to me because I've got people, thriving right now. It's kind of crazy, but it's all part of the deal. And but here's another thing I wanted to show with this doubling model, right? I said, I showed 2 to the 9th, which is our 1022. That's what 1022 is based. 2 to the 12th, 4,000 people in a year. That's not too shabby. If you doubled every month for a year, that's pretty cool.
Yeah.
What happens if it goes a little bigger than that? 2 to the 20. Doubling, like if we can picture doubling in a month, everybody can picture doubling in a month. I think this is what it's based on.
Eventually, you run out of people. Months. That's the issue.
Yeah, and in 20 months, though, you got 1 million people.
Right.
Just getting people's heads around doubling in 24 months. Is that a pretty decent number? Would you like to have a little village of 16? And you actually, if you add it all up, it's actually 32 million. So that's like with addition as part of that. But 16 million, not too shabby. How many months do we have to go to reach the whole world?
Probably less than 36.
Yeah, it's actually 30 takes us to 2 billion. 31 takes us to the entire world.
Right.
The power of doubling, and all they said was 248, right? Mm-hmm. This, the entire world, and so then that's where the numbers break down for people because it overwhelms them again. And you always have to bring it back to, how did you get there? Doubling in your month. And you have your friends double in their month, in their second month, and they have their friends double in their third month. And we change the world and we bring it back into everyone winning. This is these are the big numbers from the team. These are actually from a few days ago. This happened on Saturday.
How do you pull up that that little chart like you've got shown there? The
yeah, it's right on your GS Partners dashboard. It's down in your network, team member in each level, and it's near the bottom. I'll just scroll down on your dashboard.
Did you say on the dashboard? Okay, let me go.
Yeah, it's on your main dashboard, and you scroll down quite a ways. It's near the about 2/3, maybe 3/4 of the way down on your dashboard to get there, and then you can play with that a little bit.
Okay. Sponsor information, KYC status. So I see it. Okay. Yeah, I see it. I see it at the bottom. Yeah, I was thinking I had to click to get to it, but it was right there on the page the whole time.
It's right there, and you can actually play with the date, adjust them. You could see how you did in the first month, how you did in the second, how you did in the third, and it'll that filter would allow you to put whatever dates you want in and say, how did I do this week? And you could literally put in a 1 week timeline, throw on the filter, and say how you did that week with your build. Like it's pretty dynamic. It's pretty cool. I have some videos out there showing how to use that and tie it into what we're doing in that. But We have 2 teams of well over 1,000 people, Dwayne, in our little build in 3 months, and a team of 800, and mine's over 700, and 500 and 400. And what the problem when I show numbers like that, people say, yeah, well, that's for them.
Yeah.
The idea in a village is it's for all of us, but somebody has to start it, right? Somebody has to show it first time around. So that's why we're showing it, not to say, look at us. It's actually, don't look at us, look at the system. This is what the system of doubling produces. That's our goal here. But let's dig down. This one's actually Larry out of Uganda. Larry's 75 years old.
Wow.
He's got a paycheck coming from his 9 levels of 138 people, and then it goes beyond that. And this is not 2 teams. This is I've only built his 1 team so far.
Interesting. Well, he's got to be happy.
Yeah, he's making money, and this is the goal for everybody. People say, well, you're highlighting another big number. Well, I'm highlighting a guy that's way down in our system. Like he's like in my L4, my L5 position and that, but we just build deeply all the time with what we do. And you're patient with it, 248. This is what it produces. It just produces this by just being patient and sticking with the process of 2 times 2 times 2. And this is what it ends up looking at. That chart on the right side is also, you can go into your back office in your unilevel tree and explode that out. All those little dots, they kind of look like stars in the sky right now or something, or little minnows swimming. I don't know what they look like, however people's idea here and that. But every one of those is a precious person with a family and dreams and hopes and everything happening there. These aren't dots to me. These are real living people who are given a chance that they have never had in their life for financial freedom. Imagine Larry in Uganda, kind of a rural area of Uganda that he lives in, and Uganda's a bit of a challenged country right now even. And here he is in the most thriving non-national currency model in the world, collecting Bitcoin, Ethereum, NRG 999 coins, and that it's startling that we can do it for Larry, and if we can do it for Larry, we can do it with everybody. That's the point, because the village works together. We're able to do that. This is what we're able to do. So when individuals join in a cooperative venture, we are in a cooperative venture. We're not isolating people. We're bringing them together. The power generated far exceeds what they could have accomplished acting individually. Why is that such a hard concept for people to get? I don't know. Maybe because we were taught to live in little silos, isolated from each other, because we didn't understand the sacredness of money, which is meant to connect us, meant to bring a path forward for us. We know it can be corrupted. We know, you got the story of Jesus and Judas in the Bible, corrupted by money.
Right.
But that doesn't mean Jesus wasn't using it and letting it flow. And we know he was funded in a patronage model of a lot of wealthy women. We're supporting a lot of the work that he was about doing. They got it. Typically in the stories of the Bible, women don't get highlighted, but quite frankly, they were the backbone of much of what happened in the Gospels with Jesus and that, because
and they remain today much of the backbone of society. Mm-hmm.
Yeah. The Bible was edited by men, so that's so there is that.
That's true.
To consider, and men sometimes are a little boys in big bodies. Sometimes we're very, very fearful of somebody showing them up or whatever, and that. And the women are like, hey, I got a home to live for, I've got a family to take care of, and I'm going to do it well, and I'm going to do it for the benefit of everybody. They don't think in isolation; they think in community, and that's just the way it was even in Jesus' day. Nothing new there. And that's about all I wanted to share today on it, is this whole area of doubling for us. And if we can catch it and get people to come embrace it little bits at a time, free registration, we need minimum amount of information to get you into our model here. And we get to work with virtually everybody. I have a friend out of the Philippines. He brings me 5-10 people almost every day right now, because of the simplicity, and we're able to get them fired up and going. And so he's just rocking and rolling, because he took the simplicity of this, applied it, and now he's got beautiful beautiful team going that we're working with him. But it's not just that. We're in many nations of the world right now. And Uganda's obviously big, and Kenya's big for us, and we're a little bit in Nigeria and South Africa, and literally around the world with what we're doing. And we're mixing our friends in together to make it a lot of diversity. Hey, it's free. We're changing the world because we've said 2x2 can really impact the world, and we just believe it with our whole heart. That's where we are. So
now that link that you see up there to the Zoom room, or the hub as it's called, I'm putting that in I just put it in the chat box, and it's a clickable link. And so if you've never been to a Zoom meeting, you don't have to show yourself on camera if you don't want to, okay? When you click that link, it will ask you, do you want to join with video or without? You can choose whichever you want. And then it will ask you, do you want to use internet audio? And you say yes. And then all of a sudden, you're in the Zoom room. And again, if you've chosen not to join with video, nobody sees you, so you don't have to comb your hair first. You've already combed your hair, and you want people to see you, then you can just say yes to the video portion. And you'll be welcomed, and people will answer any questions that you have. Kathy's there, Paul's there, Don's there, David's there a lot. Number of people. The room stays open pretty much around the clock, almost. So you can drop in there anytime, ask for questions. There's no sales pitch, there's no pressure, none of that. They'll walk you through how to open up a free account so that you can get into the back office and take a good look at everything and decide if this is something that's right for you at this point in your life. And
yeah, we like to make it a community feel, very different. We really don't do sales at all, Dwayne. We have products that are for sale, and they can be very, really great products and stuff. So we do have that. It's a bank, but in that way. But let's not overcook the value of, like, it's customers first. Like any business principle out there is about customers. You've got to have a way of collecting customers. Without customers, you don't have a business. It's that simple.
I just had one of my news feeds just popped up a recent article that was published. Visa plans. Well, here Visa plans to not only facilitate Bitcoin purchases, but also enable Bitcoin payments at any of the 70 million places around the world where Visa is accepted. So let me just click through to the Visa seemingly plans to follow in PayPal's fresh footsteps as it works to adopt Bitcoin. The firm's CEO, I'm talking about Visa's CEO, Alfred Kelly, said on Fortune's Leadership Next podcast on Tuesday that the payment processing behemoth is willing to facilitate not only Bitcoin purchases, but also spending functionalities, and in a big way. We're trying to do two things. One is to enable the purchase of Bitcoin on Visa credentials, and secondly, working with Bitcoin wallets to allow the Bitcoin to be translated into a fiat currency and therefore immediately be able to be used at any of the 70 million places around the world where Visa is accepted. According to Kelly, Visa is working hard to earn its role as an intermediary in financial transactions, even after Bitcoin sees mainstream adoption. Other than Bitcoin, the payment processor also plans to allow the use of stable coins. He admitted that the company recognizes a strong potential for those to become a new payment vehicle. Kelly said Visa is collaborating with about 35 partners involved with stable coins, explaining that these are currencies that are fiat backed, but we're allowing this translation, if you will, into a fiat currency and in a wallet where there's a Visa card, and again that Visa card can be used with the translated digital currency over to the fiat currency to purchase at any one of our 70 million locations. That's kind of a big deal.
Yeah, and we've got it as well with our card, and Like in our system, we're able to spend Bitcoin and Ethereum and our G999s fluidly right now. Like we can make a spend within our system as well. And
the G999 card, that one carries the MasterCard logo. Is that correct?
Yeah, that's carrying MasterCard. And,
have you actually gone out and spent anything on yours yet?
I haven't done it, but I've had a number of friends in my area here in British Columbia, Canada, that have gone in it. I put money on it. I just haven't got out to use it, but I know it's being used effectively right now from ATMs to making gas purchases and all that kind of stuff as well. So it's a very effective card. I have the money on it. I just haven't gone out and actually used it, and but I will. But it's not a card that, unless you have a lot of crypto already, it's not a card you necessarily want to get right at the front end. You want to kind of come in and get your feet wet and really get understanding this world of crypto, learn how to use it safely and securely. That's why we move coins around, we do, and packages the way we do it, so that people are learning about this thing in a safe way with no risk. Because when people do things that they feel risk about or with fear, doesn't go well for them typically, and we're trying to take all of that fear and feeling of risk out of the way for people. And then as they grow, they'll say, "Yeah, I'm ready for that card now," because their assets have increased significantly in that. For me, I want our coin to do so well. This is part of what 1022 for me is. I want our coin to do really well, which means we really need a strong, happy customer base. This is the goal here. A strong, wealthy, money flowing, cash flow flowing customer base. I want people coming in, and 2x2 lets me serve everybody in such a way that they're all making money. And therefore, if you're making money, are you a happy customer within the systems?
Yeah,
simple, right?
Another article that caught my eye, it came out yesterday or the day before. Bitcoin ATMs are coming to a gas station near you. A new feature has appeared at smoke shops in Montana, gas stations in the Carolinas, and delis in far-flung corners of New York City. A brightly lit Bitcoin ATM where customers can buy or sell digital currency and sometimes extract hard cash. The machines have multiplied quickly through the United States over the past year, fueled by a frenzy in crypto trading. Kiosk operators such as CoinFlip and CoinCloud have installed thousands of ATMs, scouring areas competitors have not yet reached. I just assumed there was a demand and people wanted Bitcoin everywhere, said QuadCoin founder who flew to Montana after scanning a U.S. map for Bitcoin ATM deserts. During a week-long road trip, he found 7 places to install machines, including 406 Glass, a store in Billings, Montana that sells tobacco, vape juice, and colorful glass pipes. As of January, there were 28,185 Bitcoin ATMs in the United States. Roughly 10,000 came within the prior 5 months. Bitcoin's growing popularity has been the primary driver for new installations. The reason people use ATMs rather than transacting online vary. Some get paid in cash, some lack bank accounts, some want to send remittances abroad or want anonymity, while others feel more comfortable interacting with a physical machine. Rebecca White, a 51-year-old Bitcoin investor who lives in the Pittsburgh area, makes larger investments online and uses Bitcoin ATMs when her family has extra money. When we do our grocery shopping and we have $60 left, I will stop at the Bitcoin ATM, said White, who works in the nuclear power industry. Some machines only offer Bitcoin, while others let customers invest in various digital currencies. Few Bitcoin ATMs can actually spit out cash, and they cost more than regular ATMs or transacting online. Fees range from 6% to 20% of a total transaction. But that will come down as more and more of these ATMs appear. Competition is always good for the consumer because there's price competition. So, well, David, thank you so much. As always, a pleasure to have you with us, and we look forward to chatting with you again next Wednesday. And
Okay, thanks for having me on, Dwayne. Good to be here.
Oh, hang on 1 second. I got a question here from Kenneth. I have listened to this presentation 3 different times, but have no
Yep.
clear understanding what you're doing. Is there a video explaining just the basics? I have no idea what 2x2 means. I have never done network marketing, and as I have seen too much abuse even among Christians. Well, Kenneth, that's the reason that I gave you the link to go to the Zoom room, the hub, and you can ask all of those questions. And there's some very nice people there who will explain everything to you. So any question that you have, you can get an answer for that question right now. All you have to do is click the link that I put in the chat box. Not in the, now you posted your question in the question box, but there's also a chat box. If you look at the chat box, just click that link. All right, David. Thanks again.
Okay.
All right.
All right. Take care. All right.
Talk to you soon.
Take care. All right. Bye now.
Okay. Looking for Garrett here. And I don't see Garrett. Well, I don't know why I don't see him. Let me call him real quick. Hey Garrett, I went to click on you and you were gone.
Oh yeah, I've got a. Is it okay to come on now?
Yeah, come on right now.
Okay, yeah, I got a real short one today.
Okay.
But,
Yeah.
some stuff important. So
Okay, come on.
okay.
All right.
Thanks.
All right, so Garrett will be here in just a second. He needs to be freed up so that he'll be ready for the Fed announcement. So let me just be patient and wait for him to pop in. There you are, Garrett. Okay. Garrett Jones, make presenter. Yes. Okay. All right. You got it. All you got to do is click and accept. Okay, Garrett, I can see your charts. But I don't hear you. Oh, it looks like you're muted on your end. So you just need to unmute on your end, on your heads. There you go.
Oh, okay.
Okay. Yep.
There we go.
There you go. Welcome to the show.
Can you hear me?
Yep, I hear you.
Loud and clear? Too loud? Too clear?
No, you might get a little bit closer to the mic, but you're
Okay.
crystal clear.
How's that?
That's
and
perfect. Yep, sounds
okay,
good.
good. All right. Well, I got a new mic and so we're and headset, so we're ready to go. Can you see the chart?
I can. Mm-hmm. S&P
Okay,
500 cash index monthly.
Let me minimize that so we can get the whole thing on there.
I can see
let's
both
see.
red arrows.
Yeah, this is a monthly chart of the This is a monthly chart of the S&P from the 2009 low. I don't know why it's not letting me show the whole thing, but anyway, here's a 2009 low, and it's just the big picture here. I'm gonna let's do it this way. Okay. That's what I wanted to show you. This is the S&P 500 monthly chart. This is the move from the 2009 low. Let's do it one more time. This is here's the picture. This is a relative strength indicator here, and I've got to jump off quickly today because I think today's Fed thing is going to be very important. One of the things that's happened lately is interest rates have gone up, and we've had one of the things I wanted to show you was my long-term chart interest rates, and I didn't do that. But interest rates went up for about 40 years up into 1981, and they've come down for about 40 years now. And we may be getting to the point where the Fed can't control that any longer. So I think we've got, this is the overbought market of 2018 in January. This is the Christmas low of 2018. This is the February 2020 high, the March low, and where we are today. This is insanity because from this point here, everything was wonderful. The economy was great. You had a president who actually liked America and was patriotic and believed in God. And now we don't have that any longer, and we're up here. So when somebody can explain that to me, I'm running into somebody a whole lot smarter than I am. Anyway, this is a monthly chart. You've got the extreme relative strength overbought here back in January of 2018. You've got an enormous divergence. I think we're setting up a major market top. I've got two scenarios. One is that this is the top. Everything on a Fibonacci basis going back to 1929 shows the year 2021. So I think that has to be respected.
We printed a daily doji yesterday on the futures. I haven't looked at the cash chart.
Oh, well, yeah, I think we're really ready here. And I think this is a very, very dangerous point. And if we don't have a top immediately, as of even yesterday, I think we will have one very, very soon. My second scenario is that we get a pretty decent correction, maybe even into the summer, and then one more run up. This assumes that the Fed can keep all this together and do stuff.
What do you think the Fed's going to say today?
I have no idea, because rates have gone against them. Smart money's concerned. I think they're going to, typically, Fed will alter policy to try to handle the situation. Whether they do that today or not, I don't know what they're going to do. I'd love to see some kind of a knee-jerk rally up because people were liked what they heard from the Fed. But if we do, I think it's a selling opportunity, and maybe this thing just falls apart. I don't know. It's I'd like to see the rally, but I'm nervous, and that's why I'm probably got to jump off here pretty quickly. What I wanted to show you is two other charts. This is from.
Do you think there's any chance that they'll actually change the interest rate?
I don't think they want to.
Okay.
I think if they raise it a quarter of a point, that might. I don't know. I don't think they want to change it. But this chart here is margin debt over gross domestic product.
Okay.
So if you just have margin debt by itself, that's one thing. But if you're putting it over your productivity, it starts to get pretty meaningful. This is from John Hussman's work, which is www.hussman.com. I want to give him all credit for that. This shows 1987 at that peak, 2000 at that peak, 2007 not quite as overbought here, and then here the January overbought peak, and now being above that, which is just insanity. It just means that people have gone completely speculative. You've got all the people in here that you had over here. You know that, hey, this market, they bought into it. Everybody bought the story. You've got the mass of the gullibles here and here. This next chart I saw and was incredibly impressed with it. I didn't even have a chance to review it, so we can review it together. But okay. I'll tell you why I like this. This is endowment over spending multiple to fund 36 years of real spending using a fixed 60-30-10 allocation. Stocks, bonds, and cash, I guess. This endowment spending multiple calculated based on 36 years of expected inflation-adjusted distribution, discounting each distribution. So this is really interesting. This is big money, college endowments, that type of stuff, attempting to fund their endowment, based on what their projections are looking forward. What's so good about this chart, and the reason that I selected it, not even knowing what it was, and running the risk of monumentally embarrassing myself publicly by selecting a chart that you haven't reviewed. But Husband does really good analytical work, so I figured that he'd have a logical enough chart that I might be smart enough to figure out on short notice. So that's what this is. And this is what the reason I wanted to put this in is this is 1929. Why is 1929 important to me? Because it's the last cycle. It's the last long wave cycle. I've kind of discovered that long wave cycles last about the length of a human life expectancy at that point in time. Back here, it was about 50 years or so. Now it's about 78 years or so or more. And but anyway, here's where that was in 1929. Again, this is based on what they're seeing in the future. So they were bullish here, and this is where they were. This is that middle range, that period in the 1960s and so forth, and then in where we are now. And now we're above where we were in 1929, and that's what's so important, because on this kind of a chart where we are, because we're in that same 90, it turns out to be like a 90 plus year cycle. You've got two periods of monumental debt buildup. The first one happened from the economic low in 1933 when the banks were closed. It peaked in exactly 40 years later, in 1973, during Watergate, and then that 50% correction down into the 74 low, and then another what they thought would be a depression in 81, 82 because interest rates went up over 20%, and then that second 20-year movement to the upside, which brings us to right now, and here we are. And you have a plateau period in between of 16, 17 years in that case. So that's why it's a 90-year cycle. But we are now, and this should be higher than this. Even though this is 2000 in the most overbought market, you can see here's something that's saying, no, we're way out of line right now. And that's my message today. We're way out of line. Theoretically, when you're way out of line, something should happen to get you more back into line. And we should at least retrace toward the mean at this level if we don't do much more than that. My guess is that this is the first time in a long time, and I haven't been calling for anything like this on your show going back a long time, but I think we've got the risk of maybe revisiting that March low that we had. Again, this is if the Fed has been controlling and manipulating the markets, I believe, to a high degree. I think if the truth were told, people would see a great deal of money going from the Fed to the banks that are in there to do buying programs to support the market. Because remember what this market is all about at this late stage of the cycle. If we can get away from Republican and Democrat for a while, which is awfully hard to do, and put our heads where it should be as just human beings, forget the politics.
Right.
We're human beings with human desires that were given to us by God, our Creator. So what are those desires? Food, shelter, clothing. But, the other desire is freedom. We naturally want to be free beings. And the other end of that spectrum is control. A certain group of people, I'm presuming they're humans. We may find out something different later. I have no idea. But a certain group of people that appear to be just like us want to control us. And they're doing a really good job. I don't think this pandemic is an accident. I think they've known about it. I think they've made this virus. I think they've made this vaccine. Look what's happened. They've changed the freedom president, assuming that's what he really was. Who knows anymore? But he was certainly more in the direction of freedom verbally and action-wise than anybody we've had for a long time. So let's give him the benefit of a doubt. I mean, the only reason I say that is that these people that I call the controllers are in control. They've been in control of the last 4 presidents for sure, and put the one before that back into a control position with a bullet. So they play hardball if necessary. And whether Trump was fully on board or just kind of that ebb and flow, they're very good at ebb and flow. We'll go this way, we'll go that way, we'll come back, we'll go forward, because they don't want to lose us. They're very, very smart, and control is their deal. And boy, they've come under full control. And what's helped them do that? A virus that a lot of people knew about before it came about. Actually, Fauci warned us that, gee, there might be a pandemic in 2021 or whatever it was, 2020. How would he know?
It did seem as though we were, well, some would say we were ill prepared. On other fronts, I would say it was almost as if it was carried off according to some script. But,
oh yeah, I mean he knew about it. He did it. Here's a guy who hasn't had a patient for 50 years, and other medical doctors have said that they don't think he's much of a doctor. I mean, the guy who invented the PCR test, which he says wasn't for the purpose that they're using it for. It doesn't do that, and he didn't think Fauci was very. I can't remember exactly what he said, but it was kind of along the lines that this guy doesn't understand the science, and I'd say it to his face. And he doesn't. He's not there to be a scientific guy to help us. I think he's there to do just what he's doing. I think they're going to give him a pat on the head, and the guy's probably a billionaire. You got any doubts that this guy owns stock in the vaccine? I have no information on that, but I'll tell you, I'd be the least surprised guy on the planet if that happened to be the case. But anyway, I think this is a very dangerous place for the market right here, and I got to jump. I apologize.
Yeah, no, we got about 5 minutes to 5-6 minutes before the actual announcement, and then after the announcement, there will be a press conference at 2:30 Eastern.
Yeah, and I think, normally on these Fed things, I think you can tape them, and if you have insomnia, you can play them, and you'll sleep like a baby. This one might be a little different, so I don't know. I just want to check it out. And anyway, thank you so much for
thank you, Gary.
Time with you. It's always
glad you got your headset squared away, and feel free to pop back on again Friday or early next week whenever you got something you want to share.
Love to do that. Thank you so much,
All right,
Dwayne.
Bro. God bless.
All right. Bye.
Okie doke. So we'll do this and this. Okay, and so crude now has popped back. That was the last market we looked at. Crude has popped back above that short trigger, the CTA. And we'll see what the Fed announcement does. The only market we didn't cover was gold and silver. And so last night, the CTA, let me find it over here again. The CTA numbers for gold last night, the CTAs are forward guidance for the entire session. The long line in the sand was 1735. $17.35, And so we had a swing high at 36. That's $100 per contract traded. Back below the trigger. And then a high at, so that's $170 per contract. But price not really able to do much. Okay. Sort of that iron curtain thing we talk about. The short side on gold was 1720, which we've not seen yet in this session. And then silver. Okay. The long side on silver was 26.46, which we have not seen. And the short side was 25.76, which also has not been touched. So metal's pretty much going sideways as we head into this Fed announcement. What do we got? About 4 minutes. Okay. As they release the numbers, I will turn up the volume here, hopefully loud enough that you can hear it coming off my other screen over here. Let's close this and this. And we'll want to watch the S&P and see how it responds to whatever they have to say. Now that's the S&P 30-minute. We're in a bearish position. We found support at last week's weekly zone. The next current weekly zone below us is down at 3912/13, where we found support earlier in the week. And the daily, remember, step line is initial support, blue and climbing, which is at 39.13, and then the 24% fib retracement is at 39.10, and we just so happen to have a weekly trading zone at 3912/13. Okay, so we'll watch this unfurl on a 30-minute. There's a 30-minute ES. And then let's take gold. And we'll shrink that up. And we'll see how the markets react. $30-minute S&P, 30-minute gold, daily S&P there in the background, and it looks like we're about 1 minute away. So I'm going to crank up the volume here and we'll listen to this together.
So as not to spook the market and rather wait a little longer before they really put pins on the plot.
The folks you hear talking right now are just some commentators on I think it's CNBC. But we'll have the actual announcement here in about less than a minute, if they're on time.
In terms of their forecast on the economy, particularly for this year, and I think the knife edge question here is, will they add a dot or push a dot at above 0 to 25 basis points for 2023? I think it's about a 9-vote to 9-vote decision right now, so it's absolutely on a knife edge. But I think it's possible that they will say, look, given this, given our outlook, it just doesn't make sense to say they will keep rates flat into 2024, and that's obviously what we'll all be watching today.
Let's take a look at the markets right now, because we're right now going to go to Steve Leisman for the Fed decision. Steve.
The Federal Reserve leaving interest rates unchanged after its March meeting, but making some substantial and some not substantial changes to its forecast. First, the ones that didn't change. The median funds rate for the forecast sees no hikes through 2023. That's the median. There were some changes inside. We'll get to those in a second. It sees inflation at or above 2% this year through 2023, including 2.4% this year for the PCE indicator. It lowered the employment rate forecast to 4.5% for this year, going to 3.5% by 2023, and it boosted its GDP forecast. This is the average median forecast for all Fed officials, boosting it to 6.5% from 4.2% for this year. Talking about those famous dots, where are the Fed officials when it comes to the outlook for rates? 4 officials now see 2022 rate hikes. That's up from 1 in the prior, that is the December projection. 7 officials see 2023 rate hikes. That's up from 5, but still there's no change in the median because only a small number continue to call for those rates. Let's get to the statement now. The Fed saying, or a new change in the statement, that economic and employment indicators have turned up recently, though sectors affected by the pandemic have remained weak. Fed continues to see inflation running below 2%, that is its 2% target, and using some boilerplate language from prior statements, is committed to using its full range of tools. The path of the economy depends on the course of the virus, and policy will remain accommodative until the Federal Reserve achieves its goals. Asset purchases will continue, as it said in the past, until substantial further progress has been made. The decision was unanimous. Tyler.
All right, let's follow up with a couple of questions. On inflation, they see for the full year, even though it's running below 2% now for the full...
Okay. Unanimous Fed decision. Interest rates were not hiked. And this almost looks like the old days of a Fed announcement. This 30-minute candle here, we got a low down around 39.30 and a high up around 39.60. That's a 30-point spike. Haven't seen that in a while on a Fed day. Now, we don't trade the news. We don't trade the reaction to the news. What we trade is the follow-through to the reaction to the news. So we're 2 steps removed from actually trading the Fed announcement. Michael and I both, over the years, in the beginning, we traded, like everybody else. But no matter what we did, it was just kind of like flipping a coin or gambling, trying to second guess, okay, first you got to guess what the news is going to be, and then based on what the news is, then you got to guess what the reaction is going to be. So we figured out, hey, why, instead of all that guessing, why not just wait and see what the news is, and then see how the market reacts to the news, and then as the market goes back to its natural rhythm, then just step in and do the 2-step. And that is what has worked for us for quite some time. Okay, so if you happen to be long and took your profits, you did well. Okay, price has retraced half of that move already. Gold spiked higher along with the S&P. Historically, those two have traded in opposite directions. We've seen them trade in tandem more so lately than in the past. Is that the new normal? Well, I don't know. Can't say for sure. But now keep in mind, this is the first wave of volatility. Okay? This is the knee-jerk reaction to the Fed announcement. We haven't heard all of the fine talking points. Jerome Powell, as far as I know, at 2:30, will deliver a prepared statement. He will then go to the audience for a Q&A session. And so that's when the next wave of volatility will come, because we don't know what questions will be asked. We don't know what answers will be given. So we're not trading the announcement or the news. We're not trading the reaction to the news. We're going to wait and we'll trade the follow-through of the reaction to the news. Okay. That's how we do it. And typically what happens after a Fed announcement and all the Q&A and everything's said and done, price will go back to doing what it was doing before all of the activity. Now that's not a forecast. The price is going back to 39.30. We had a very bullish move to the upside. So we get a retracement. We may very well get a continuation. Looking at the daily chart here, just remember the all-time historic intraday high is, I'm getting my pop-up. There it is, 39.70.75, and the all-time historic closing high, 39.57.75. Okay, all right. And with that, we will go to our good word for the day. Yesterday we talked about fear, part 1, and Michael R. just shared that Friday is quadruple witching day, and that is a day where there's lots of options expirations and there can be some heavy-duty volatility in the market. So, dealing with fear, part 2. Genesis 3:10. I was afraid and hid from you. We tend to think that successful people are exempt from fear. Nothing could be further from the truth. Every generation in history has experienced fear. The first person God created was Adam, and the first recorded words Adam spoke were these. In Genesis 3:10, Adam spoke, first time that his words were recorded. I heard your voice in the garden, and I was afraid because I was naked, and I hid myself. Fear is genetic. It's part of human nature. Studies confirm that our 7 greatest areas of fear are these. Number 1, finance. Number 2, health. Number 3, career concerns. Number 4, parenting struggles. Number 5, family relationships. Number 6, accomplishing personal goals. And number 7, death. So the question, are you fearful and anxious in any of these areas? Fear can be a destructive force in your life. One of the old English words for fear means sudden attack. It's akin to an old German word for fear that means ambush or snare. That's what fear does. It attacks us and takes us captive. So what's the answer? Faith in God. Fear weakens, but faith strengthens. Fear imprisons, but faith liberates. Fear paralyzes, but faith empowers. Fear disheartens, but faith encourages. Fear sickens, but faith heals. It's been said that the words, fear not, are recorded in Scripture 366 different times. If that's so, God has given us a fear not for every day of the year and an extra one for leap year. And here's one of them from Isaiah 43:1. Fear not, for I have redeemed you. I have called you by your name. You are mine. So friend, whatever the fear is, just know that today God is with you and He promises to strengthen and guide you in every situation that you face. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.